Hi traders, welcome to this YouTube interview. In today's Forex Trader Talks, we're going to be talking to Cleveland. Cleveland is a trader that is based in Georgia, United States, who has a really impressive background, having worked in investment management. Cleveland believes that fundamentals are key in trading and reveals a really unique strategy that could work for beginners and pro traders. So make sure you stick around for that one and enjoy. Hi, Cleveland. Welcome to the Blueberry Markets YouTube channel. Thank you for joining me today. Would you be able to tell me a little bit about yourself? How did you first start to get into trading?
Okay. Cleveland here in the US, in Georgia to be exact, the Southeast. So got into trading. My dad was in finance. He went to school for finance, investment management. I ended up going to school for finance, investment management, mainly because I saw how, he just was really a competent guy when it came to the world of business and markets. And I just remember times in high school where, he would just kind of be contemplating different, whether it's investment ideas or certain stocks and things of that sort. And I just was pretty intrigued by that because there was really nothing else going on, really. My mom was a teacher. So the only, I guess, gateway or the only real avenue for me to understand anything outside of like being a kid in like business was, or being an adult was like capital markets, finance, So I guess that kind of like engineered my brain to think that's basically being an adult. That's what you have to do. You get in markets. And so like, it really only felt like the only option, to be honest. So went to school, university for finance investment management, did a couple of really cool things there, internships, all that stuff. And then long story short, got out of uni and worked for a couple of firms, some big, ended up really falling in love with the smaller firms because I felt like I had a little bit more say so on, what direction certain portfolios, we would basically take them in. So I actually got really heavy on the macro book at a firm called 𝖢𝖥𝖣yi Investment Management that was basically 95% equities, and had a lot of fun kind of doing a little bit of hedging, letting them know about certain things that are happening geopolitically that could come in and affect US markets, with their equity portfolios, and eventually just went all in on just studying just that, currencies, commodities, emerging market stuff, like, trading, just seeing the explosion of what happened in like Africa in terms of their, GDP, and not really being able to trade those, but just kind of seeing so much come online there and kind of seeing people make money off of it in like kind of more professional markets was also really interesting. So still trying to figure out, like, as I develop, how to get deeper into, emerging markets in the crazy ways that I've seen some of the big guys do. But yeah, that's basically where I'm at so far.
Nice. So you didn't want to really go down the teacher route of your mom, but I suppose you kind of have in a way with your YouTube channel.
Yeah, that's true. That's very true. Yep, my mom, my grandma, my grandpa, they were all educators. So I think that's probably where I went with that. You're right. That's true.
Okay, cool. So when you were working with these sort of investment management companies, where did you kind of start off there? Were you straight looking at FX at that point, or was it like you said, equities and things like that, or where did you have to kind of start at the bottom and make your way up?
Yeah, especially at the big ones, you're coming in when you graduate university, at least here in the US, the first job that most finance people get is what's called a financial analyst. You're a junior analyst, you're doing some research, you're kind of, giving some suggestive ideas as to your take on capital markets. And that's just kind of going up level from there because, the last thing a big wig money manager guy wants to do is kind of scroll around and try to figure out what's happening in the world. Usually he has people underneath him reporting to him what's going on. And that's basically that. Now, when you go to the smaller firms, it's a little bit different. You're kind of, there's less of a level there, less red tape or less corporate kind of, goobly glop on how to kind of get to, talking with some of the big guys. And that's why I really liked kind of being in those environments. So started off as a financial analyst. Once you kind of go from that analyst, you kind of can go into a more kind of off the cuff, like, you can go two different directions. Some people go senior analyst. They kind of can sit there for the rest of their life. And that's what you'll see, when you're on E-Trade or Fidelity, there's these senior analysts and there are these guys that are basically picking stocks and they're giving these suggestions, like Morningstar or whatever. I didn't want to go that route because I saw that there's nothing at the end of that. Like you're just an analyst forever. And
Yeah.
so I pivoted over from being an analyst and wanted to go deeper into more like research, but not just research in the capacity of what's happening in capital markets, but more or less research in the capacity of like, how do these capital markets affect asset prices? You know, because you can analyze the fundamentals and the economics of a country, but that doesn't mean it's going to affect capital markets. It's just, you're just an economist at that point. So I was always really intrigued by, you know, how capital flows were swayed in different directions based off of the analyst work. And so I kind of went into that route, and that's kind of where I started to kind of flow into more of a researcher that was reporting to the trader. And then from there, you know, they start kind of asking you about kind of how you would weigh that position, or they'll start kind of trying to rationalize how big of an opportunity it is, you know. We could talk more about that, but yeah.
Okay, cool. So were you personally trading at that point, or was it just working as this sort of analyst?
So I had a long-term investment fund thing, you know, where I'm just basically stashing my cash, putting it over into some Vanguard stuff. I was all in trading with the firm at that time, you know, didn't really have time to, you know, do my own thing. I really felt like that was my thing in that moment. Yeah.
Okay. So when did you start to transition into kind of your own sort of trading?
When they started to slow down the amount of, let's say the time horizon got longer. So their investment ideas would kind of stretch out a little bit longer. So they'd be looking for these longer trends. You know, we wouldn't be talking about what we're going to see in the quarter. We'd be talking about what we're going to see in the next 6 months.
Right.
And so I just got more time on my hands after that, once they started allocating capital towards longer term investment ideas and theses. Yeah.
Okay, cool. So, and then with your own personal trading, did you go straight into the FX markets as well, or did you kind of use your experience from what you've been working as and use that to your advantage?
Yeah, so we were doing a lot of stuff. I mean, they had some institutional stuff, but I was kind of poking around a lot in TD Thinkorswim. And, you know, since their platform is agnostic, FX, equities, options, I kind of was into everything a little bit. But slowly started to gear more towards the micro stuff. And that's when I really went all in on FX and started creating like, you know, more FX content, learning more about FX myself. Yeah, so at first it was a little bit more, I'm kind of into everything, but then slowly, as I was getting more and more infatuated with FX, because not as many, one reason, you know, you really don't miss anything. There's only so many economies that people are trading. In the equities world, you know, there's thousands, tens of thousands of stocks. So one day I feel like I'm doing great research. The next day, people are talking about all these amazing companies that had these earning releases, or, oh man, this medicine just got sent to trial. It's like, well, fuck, I feel like I'm missing everything. Sorry. But yeah, so that's why I went into FX. I feel like I could kind of see the whole market in one fatal swoop.
Okay, that's cool. That's cool. So because of your background, was you sort of profitable straight away, or was there a transition?
So I can't say I was like extremely profitable straight away. Before I got to the firm, no. So 2012, 2013, 2014, I was not making any money at all. I was taking basically college refund checks and, you know, just throwing them into different brokers and blowing them up. But still trying, you know, still learning the best I could. It wasn't until I kind of had somebody kind of come in and kind of show me a little bit more risk management guidelines that I became break even for a while. And slowly but surely, I kind of crept out of break even by understanding a little bit more about how it's not about the setup in the market from a technical perspective. It's really just all about the size of the fundamental opportunity and the likelihood of a fundamental, let's call it catalyst, playing out, right? So we will basically start taking bets on certain fundamental, I guess, instances or economic scenarios that we somewhat kind of perceived to, you know, happen at one point in time. And so we just became more efficient at that. And that's where my bigger size trade started coming from. Yeah, I was going into that kind of strategic process.
Okay, so that was the sort of turning point for you, was kind of taking that sort of strategic look at it. And would you say that was down to sort of more like self-assessment? Would you say that?
I would say it was a self-assessment for sure, but I was also just around guys doing extremely well,
Mm.
and they were looking at the economics. They weren't trifling with, charts and indicators and stuff like that. So, the fact that they were all into the economics just basically told me that I need to be in it too, and I saw the results.
Okay.
And that's what really, really geared me towards that type of methodology.
Okay. So would you say, so if a beginner was to come to you sort of today, would
Yeah.
you say to them, maybe look at the economic side of things first?
Yeah, definitely not even a maybe. I'm completely sold. There's nothing that shows me that a purely technical guy can get to the point to where he's managing millions of dollars. I've never seen it. I don't think anyone has. So, yeah, I don't think there's any reason to fight reality that most large firms, from just, a guy who's maybe managing a family, his family assets,
Mhm.
and doing it well, from maybe a team of 3 or 4 guys and gals who are, they actually have LPs, and, they're managing their own firm. Yeah, I've never, all the way to the top, right, where you got $1 billion funds. Like, I've never seen anybody use technicals purely. No one has. There's no real record of it, unless you're going back to like the 1970s. And when you start going into stuff dealing with like technicals, which is really like, when we're talking technical analysis, I mean, if we get to the nitty gritty of it, we're really talking math and numbers. Yes, if you start to venture into that world, of course, the biggest and the best firms in the world operate with quantitative strategies. But this middle ground where it's like you think you're doing that is where I see a lot of people fail. So yeah, I would say just go all in on fundamentals, because you have the same edge as any other company that just does good research.
Okay. So when you go into sort of the fundamental side of it, do you think you, as a beginner, would you then have to look at sort of higher time frame stuff rather than the lower time frame stuff, or can it work both ways?
Yep. So, well, basically, if you think about it, fundamentals and looking at economic scenarios are happening. They're happening, right?
Mhm.
So if you completely ignore the time frame and just act as if that doesn't exist, you're really just paying attention to the scenario. Is it going to play out? Is it not going to play out? More than likely, those scenarios are going to be so substantial, they're going to be happening on larger time frames vicariously. Yes, they're going to happen on the small ones, but these are big picture situations that could happen over the span of months. When Russia invaded Ukraine, that was a scenario where Russia invaded February 24th, but we didn't get to a bottom of the market where people felt like things were cooling down until the end of the summer. So that was a
Yeah.
6-month long trend where the euro was just selling, 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 right? So any big fundamental catalyst, any big fundamental variable is going to happen on the higher time frames, period. Yes, is it going to happen on the lower time frames as well? Yes, but you don't really need to concern yourself with that form. You need to worry about the function of how these things work. The form of time frames is, it can kind of get you into that thought process, but you just want to disregard all that and think of the function of exactly why you're trying to analyze markets from the get-go.
Yeah, exactly. Because I think a lot of beginners, what they would do is they'll bring up like an economic calendar. They'll see, for example, the NFP, and they'll be like, right, I need to trade the US dollar at this time for, and then buy, sell. They don't really understand the sort of the whole bigger picture around the NFP, even if the Fed are even considering looking at the labor market as you know, a catalyst at the moment, because half the time they say, yeah, oh yeah, we'll look at the labor market, or not. Do you know what I mean?
Yeah.
So would you say ignore the sort of economic calendar to an extent, maybe look at what drives those markets in a bit more detail?
Yeah, ignoring the economic calendar is going to be a weight off of your shoulders, because, was the Russian invasion on the economic calendar?
Yeah.
Was Trump's surprise election win on the economic calendar? No.
No.
Was Japan not raising interest rates during a time where where inflation was at record highs across the world? Was that on the economic calendar? No, but those were the things that have impacted markets most, from a literal like sense of just, hey, this drove price action.
Mhm.
So yeah, the economic calendar is a form. It's the form. It comes, this is first principle stuff, function versus form.
Right.
The economic calendar is a form. You got to completely break it apart and try to re-rationalize what's actually happening here. And you go back to the function. And basically the function is economic events catalyze price action. We need to be paying attention to the economic events that catalyze price action most and to the highest degree of certainty. That's all you need to worry about. So PMI, who gives a flying crap? Like, that doesn't matter. But yet you have the rookie guys talking about, oh, PMI is at this level. That, again, it doesn't matter unless if market participants are paying attention to it, then it does matter. And so that's when I start getting into the conversation of pressing catalysts, where, hey, if something on the economic calendar is a pressing catalyst that all market participants are paying attention to, then sure, it will move markets. But the market only cares about pressing catalysts, and oftentimes pressing catalysts don't exist on the fundamental calendar.
That's awesome. Yeah, that was great. That's a really great insight. Thank you for that. Just to kind of move the conversation away from sort of fundamentals too much, because I don't want to give too much away. What was your sort of biggest challenge when you first started trading, just for the beginners out there? What did you overcome to kind of get to where you are?
Yeah. The biggest challenge for everybody out there is the internet destroying your idea of what this industry is.
Right.
It's going to be it for everybody. The internet is going to perpetuate and drive you into a belief system and an ideology that will never have you be successful. And you actually, unfortunately, have to work backwards from what you learn online, because 98% of the time, your first going into getting into this space is going to be through mediums that are completely wrong in their approach. Because it's the charlatans and the and the know-it-all, retail guru guys that pop up first,
Right.
So that's going to be everyone's biggest problem. And that was mine initially too. You have to unwind what you learn online, and you have to find truth. It's the old metaphor, signal in the noise, right? There's lots of noise online. Look for the signal. And oftentimes the signal isn't going to try to sell you into a belief system or have you think that they're the one-stop shop. They're going to try to give you the truth of how things are in the world. And then from there, maybe guide you closer. And then if they have something, proprietary that they offer to you, then, again, hopefully that's in good faith. But there needs to be truth first, not some idea of, they shouldn't be perpetuating some idea of how this business works. They should just be telling you how it works and completely objectively, not subjectively, and that's really hard to find.
Right. So how would somebody seek that type of individual, maybe?
Well, most people never will, unfortunately.
Right.
That's the reality of the situation. Now, if you watch this and you kind of say, okay, wow, I need to look for objective truth, well, then you can really start to lay your own foundation of understanding what trading is, realizing that trading is an opportunistic business that's existed for, let's call it 100 years now, right? And what is the nature of the business? Because we're all doing the same thing that they were doing, back then. There's no real difference. You just have to rationalize, okay, well, what is the real opportunity every day? Ray Lewis, he was linebacker for the Ravens. He says every day, tomorrow's gone, yesterday's not promised. What's the best opportunity for today? Well, that's how it is in trading. You know what I'm saying?
Yeah.
We don't know what's going to happen tomorrow. We don't know. Yesterday's gone, but today there is something that you can take advantage of in markets. And it might just simply be the inclination of a future event. You know what I'm saying? Like, that could have been the opportunity today. It's not that trading is the opportunity today. It could have been an insight that you gathered from doing research that was like the biggest opportunity. So I really don't know how they would find that individual, man. You just have to be careful, believing everything you see, and just anybody that's trying to attack what I call a secondary sexual identifier, basically lifestyle, money, clothes, all the things that kind of like, animalistically get us going. You know what I'm saying?
Yeah.
That emotional thing, like, whoa, like there's the alpha, that's an old psychological game, man. I try to go with the people who are the most mundane, boring, geeky, terrible, because they're not trying to sell you something. They don't have it. They don't have that charisma. You know what I'm saying? Bob Proctor says, you either have charisma or you have character. You know what I'm saying? And so you want to look for somebody who has character, because somebody who has character, usually they pride themselves on their ability to disseminate truth, objective truth, right? That's what you need to look for. So look for people with character, you know, maybe not so many face tats, and you'll be all right.
I love that. I love that. Would you be able to just kind of break down for our beginners, like what is your sort of favorite sort of trading setup then? So I'm guessing you kind of will look at the bigger picture outlook of things anyway. So that would kind of, you know, resonate with somebody that doesn't have much time to trade in the markets for themselves, or the, you know, they won't be, you know, be able to be looking at the markets 24/7 anyway. So what would be your sort of, for a beginner, your kind of favorite trading setup?
Yeah. All right. I got it. Are you ready for it? This is what it is. So, the best trading setup for a beginner, and what's great is this is also the best trading setup for a fucking 20, 30-year expert, is one specific strategy that I think every new guy should come in and just try to execute. It's the easiest to learn. You need to have the ability to identify when a price move has become unsubstantiated. All right, here's the example of that. Let's say Mark Zuckerberg catches pneumonia, right? Mark Zuckerberg gets pneumonia, hits the airwaves, right? On Twitter, on MSNBC, Financial Times. What's going to happen to Facebook stock initially? Probably going to go down a little bit, right? Rightfully so. And this has been really well documented that during certain times where some type of managerial figure at a Fortune 500 company, something happens to them, you're going to get a collapse in the stock. Look at what happened with Apple when Steve Jobs passed away. You had a quick dip, and then what happened? It turned around. Why did it turn around? Well, the fundamentals of Facebook as a business, initially the fear is going to come over us like, is it all relying on Mark? You know what I'm saying? He had his meta idea. What was it going to be? You know what I'm saying? Like, we're going to kind of freak out a little bit. But then eventually we're going to get a little bit, we're going to calm down, and we're going to go, you know what? I think Facebook is going to be okay without Mark Zuckerberg. It's a machine, and hundreds of thousands, millions of businesses rely on it every day. So what that just was a trading opportunity. There was a price move that became unsubstantiated. So let's call it a 10% decline in Facebook just became unsubstantiated because of your realization that Facebook's going to be okay. And so now your trading opportunity is the range back to the upside. So it's a pullback strategy. And so the reason I like this strategy is because, like, it's the whole concept of the trading business wrapped up in one nice, beautiful little, framework. So yeah, I love looking for price moves that have become unsubstantiated. You have to pay attention to the news. You have to look at the technicals to see how big of a sell-off that particular fundamental catalyst caused. And then you have to evaluate, is it unsubstantiated? So and now you can, go ahead.
Sorry. So a little bit like, an emotional move, essentially, in the market, like a psychological sort of move, almost like what happened with sort of oil in a way, when oil went to sort of $1. You know, that was like one of those opportunities where you're like, oil is $1, you know, that is never going to stay like that, you know?
Yeah.
So, exactly. I get that. That's cool. That's cool. Sorry, I interrupted you.
Yeah. You're basically going to be looking for those opportunities every week, you know? That's it. You stay within that realm. That's what I do. That's the bread and butter of what we do. Now we have a couple of different parameters around that on how to isolate those instances better and better, but that's the bread and butter basically.
So it's more like you don't necessarily need to trade all the time, but you need to almost capitalize on opportunities like that when you see them happening. So, because those opportunities are, once they come around every day, maybe, would you say once a week, once a month, maybe even, you know?
Yeah. The more vast your understanding of certain asset classes, the more you will get that opportunity. But if you focus down on the FX markets individually, then yeah, you're probably going to get about once a week.
Okay, cool. I think a lot of beginners would get a lot of hope from that, because I think a lot of beginners do the opposite. They go in and take 10, 15, 20 trades a day when
doing what too? Like, what are you actually trading? What's the actual opportunity? You don't know.
Exactly.
this scenario, you can clearly define what the opportunity is. And if you can't understand your trading opportunity, then you're not really trading. You're at the casino.
Absolutely, absolutely. So we'll wrap it up with the final question. I wanted to ask you sort of like, I was going to ask you what would it take if someone was starting out today to become a full-time trader, but I might change that into what would you say if someone's been at break even for 2 or 3 years in trading, what would you say to them? What should they do to level themselves up to get to where they want to be?
Yeah, my thing about, I'm a business guy. I do a couple other business things. Look, man, there's no company that back in the day, yeah, you open up a snail shop or a hair, a freaking barber shop or whatever. And yeah, you build in a location where nobody knows you. You have this initial investment of, let's say 40 grand, and you got to basically do your marketing. And in the beginning, you're not really doing anything, but then maybe by year 2, you get some steam. Yeah, dude, that fucking time is gone. Like, you know what I'm saying? Nowadays, honestly, the feedback loop on what you're doing, either it working or not working, is so fast that if you are trading for 2 years and you don't have results, you're doing something wrong. If we take it all the way back to when I first got my first firm job, you really think they would give me 2 years to make the money? No, not even close. They gave me about 3 to 4 months to show that I could actually, be break even. Break even is actually an amazing place to be, because all that you have risk management controls. You're trying to exploit or identify some opportunity, but you're not doing that to the extent at which you're like decimating the portfolio. And now we just have to work on identifying, hey, okay, are you finding a real trading opportunity here? Okay, you're finding it, awesome. How do you maximize the profit on that? You know what I'm saying? Or is it that you are maximizing the profits on that? You're just, maybe your losses are too big. So you can start to kind of maneuver around it there. But I would say, again, after 2 years, you're doing something wrong. It's not about to get any better. You need to figure out what you're doing wrong, because the feedback loop is instantaneous. That's why I love the trading business. Not every loss is a loss that you could have predicted or that you did something wrong. But at the end of the day, after a series or a subsequent, 20, 30, 40 losses, you have enough data there to start being able to, figure out what the hell happened. So the first thing that I would do, if you're in that situation where you're just losing and nothing's happening for you, you need to find objective truth. Because once you find objective truth, you can get to break even. And once you get to break even, you can actually start to optimize your trading performance. That's the goal for all firms. If you ever get a job as a 23, 24-year-old kid and you go to a firm, they're trying to get you to break even before they do anything else. And then from there, they start trying to optimize from there. But you got to look into the transactional data. Yeah, so find objective truth first, and then from there you're going to be able to acclimate. And don't think that time will heal all. It definitely won't. So yeah, after a couple of repetitions, if it's not working out, change it up.
Okay, brilliant. Thank you for joining me today. Would you be able to tell our subscribers where they can find information from you?
Yep, just Cleveland on YouTube, Cleveland on Instagram, Cleveland on Twitter, Cleveland Bishop on LinkedIn. Hit me up.
Yeah, we'll drop all the links in the description below. But yeah, thank you for joining me today. It's been absolutely brilliant.
Sounds good, man. Yeah, no problem. I'll be back.
Yeah, definitely. Thank you.
No problem.
Well, I hope you enjoyed that one, traders. If you did, please leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content. And let me know in the comment section below if you love this one. We can get Cleveland back on. So thanks for watching, and I'll speak to you in the next video.